Welcome back to another episode of Stuff Your Accountant Isn't Telling You. Now, today we have a great guest on because actually we have two guests coming on. And this is because a lot of people have been complaining about, they're just not working with the right tax accountant, or the tax accountant they're working with, they aren't responding, or they aren't providing very clear, proactive advice. So we're going to talk to two people that are working with an amazing firm that is actually known for doing those two things well. So stay tuned because we're going to talk about how they did it. We're going to talk about, why it was so important for them to figure it out in their firm, and some things that you probably just aren't talking about with your current accountant, which is why you need to meet them. So stay tuned.
Welcome to the podcast where we tell small business owners how to use the secrets and strategies that big businesses use to increase their profitability.
So without further ado, let me bring on my guests, Ashton and Miguel. How are you guys doing today?
Great. How are you doing?
I am great. I'm great. I'm glad to have you two on because as you and I were talking beforehand, I mean, this is a topic that a lot of business owners struggle with, is just really finding a good tax professional. And right now, I find that a lot of accounting firms are struggling because they're trying to refer people, and there just aren't that many great ones out there. So before we jump too far into the details of the conversation, can you guys just tell a little bit about your background? And we can start with you, Ashton. Tell me a little bit about your background and how you came to Tax Hack.
Yeah, so I've been in enterprise sales for most of my career. Miguel and I have actually known each other for a very long time. So he started his tax and accounting firm that focuses primarily on tax and tax strategy. And, I've always heard about it, was very interested in it. And just one day our career paths crossed where I decided to come on for him. He allowed me to come on for him. I started in sales and we started growing pretty quickly. So now over the last year, I shifted into an operations role. So now I manage the sales team and the account management team, but I am primarily focused on increasing our operations.
Nice. Now, Miguel, tell us a little bit about your background.
Yeah, absolutely. I always say I'm a tax bro. People are like, tax bro? I'm like, yeah, but tax bro. I grew up in tax. I've been doing it for 13 years, starting at PricewaterhouseCoopers. Got to manager, kind of saw the partner track was going to be, 12 years and a maybe. And, I kind of figured there's got to be a better way to do it. And in truth, I mean, part of it was we wanted to work with the right clients in the right way. So fast forward, team's grown. I've got folks like Ashton, as well as really amazing people on our side that are making sure that we're delivering that same level of tax strategy to businesses of all sizes. So that's something you'll hear us say, Fortune 500 strategy for businesses of all sizes. That's something we believe in. And I think, credit to Ashton and the rest of the team. We're able to deliver that because we've got a team that's bigger than just me. Because if it was just me, wouldn't be able to do it.
Awesome. So, you brought up a really good point I want to hit on first was, you talked about, working with the right type. You wanted to work with the right type of clients. And so that's something that I see as a huge issue, that because our firm, we don't do any tax work. But a lot of times when I'm talking to firms that do tax work, and I ask them the question like, okay, all right, what's the, right type of client or ideal type of client? They're like, oh, we can help anybody. Usually for me, that's a red flag. So you mentioned the right type of client. So tell me a little bit about kind of what the right type of client looks like for you guys.
Yeah, absolutely. I mean, I think there's, kind of like two paradigms you can see the right client. One is, I would say their technical niche. That's going to drive their needs. So if it's a service company, they've got high margins, they're going to have higher tax issues than, say, an e-commerce company that on cash basis is always running negative because they're buying inventory, right? So from a technical standpoint, having a specific client that you work with is going to allow you to create a playbook that you can execute on. And that just means time to value is a lot faster. So for those generalists that do tax, they really do need to look at the numbers of each individual clients before advising. I think when you have a niche or a niche, however you want to say it, you're able to know right off the bat, hey, I'm talking to a 20-person digital marketing company. Here are the 3 strategies that we're going to go we're going to put out there, and we know that at least 2 or 3 are going to be a home run. So I think that's from a kind of technical solution playbook. And then the other side, is your client profile. Are they digital natives? You know, do you have a demo that you cater to because you know that they know how to upload things from their iPhone? You know, they're going to get you things on time. Or do you have a demo where you have a CEO where you're going to have to call them 5 times, text them all day, and still not get a response? So I think those are the things that we figured out early on that really affect your time to value, but also the quality of your happiness. I mean, if I've got my team saying, hey, you've got to work with anybody who comes through here, you know, not looking at how tech savvy they are, or if they're a nice person. You know, I think that's a reality too. If you've got a bunch of clients that just don't care about what you do, you're gonna have a team that's not very happy with you. So yeah, I think those two avenues are really important as we look at who an ideal client is.
And to add to that, I would say also, you know, we can only layer in tax strategy based on information that we get. So if the books are a mess or they're not accurate, well, that throws off all of our projections. That throws off what we can now advise on, which is why we like to partner with firms like yourself, ones that we know when we get the books from the client, they're going to be right. So now we can actually run accurate tax projections. We also like meeting with our clients multiple times a year. That's how you get that proactive approach. You know, if we meet January 5th, there's not much we can do. The year's closed. There's really not that many tools left in our tool belt per se. But if we're meeting in March, we're meeting in July, we're meeting at year end, that's where our biggest impact can be. So clients that don't want to meet throughout the year aren't going to experience the same type of benefit as some of our clients who do meet with us often.
Yeah, that's exactly right.
No, I guess for you guys, how long did it take, you know, in the firm for you guys to get to that point of being like, hey, you know what, we're drawing a line on the sand. Here are the people that we work well with. Because what I hear from a lot of firms, and we lived through this ourselves, is in the beginning, we work with whoever would pay us. And over the time, you know, it took us I will say, it took me maybe a year, maybe 13 months before what Kenji told me drilled into my head of like, hey, make sure you're working with the right people that you want to work with. So how long did it take you?
I mean, I'd love to say that there was a day where where it flipped and we just got it right. But, you know, I see Ashton smiling, so I know that we're on the same page. Like, I think we're still going through it. I mean, I think, you know, 60-40, what's that?
It just took us too long.
It took us too long. And I think we're still getting disciplined because, you know, you'll have a referral come in. Hey, can you know, work with us? And it's a construction company. And we kind of have to decide like, hey, you know, we've identified that that's a tough industry for us to play in, and no disrespect to anyone that plays in that space. It's just, we're not going to do it. Like, we're going to focus on digital platforms where there is going to be a bank feed connection or clearing, you know, like there's all you can get like really technical on kind of what happens when you get it right. But yeah, we're still going through that process. I think it took us, I mean, I think we came out of the gate saying we'll work with anybody. And I think around a year you start niching down. And I would just say niching down is a process. It's not something that happens overnight. We still have like a random yoga studio or two in our portfolio because we're like, someone did yoga there and they wanted to work with us. But by and large, you know, we really, I think, go to market with industry specialty. And it's something that, you know, we think is really important to how we grow.
Gotcha. Yeah, I mean, it sounds like a very common sign of success, and I think growth when talking to so many different firms of like when you have that light bulb moment and like, all right, we're not going to be able to turn it like a switch, but you know, you'll kind of gradually go over time. You'll shift more to your ideal client base and less to the others. So as you're making that shift, have you seen like a kind of reaction or response to, and I guess maybe Ashton, you can answer this, for the operations team? Like, has it been like, hey, a sigh of relief for them as that shift is happening, or what's been their response as they've seen it?
Gratitude. A lot of gratitude on that. I mean, if you get the wrong client who has issues that are very hard to solve or expectations that you just cannot meet, it puts a strain on onboarding. It puts a strain on the account managers. It puts a strain on the tax advisors. Eventually, it bubbles up to Miguel and myself as well. So, you know, you get multiple departments spending time on these things. You have multiple departments dealing with issues. You know, for example, we had a new client that signed up 2 weeks ago. I was on one of the calls with them because they were talking about the R&D tax credit, which is a specialty of ours. I gave them a range on what the credit could be. The next day was their onboarding call, completely separate, where we just show them our systems, where we get information, and so we can have access to them, so we can start servicing them and introducing them to an advisor. They started flipping out on our on our onboarding specialist because she didn't know anything about the R&D tax credit. She has nothing to do with that department. And the way that they were talking to her and the things that they were demanding, we disengaged them literally the next day. We sent them an email, hey guys, we're refunding your charge. This isn't going to work out. Because not only is it the niche, but also the type of person. I mean, we don't want anyone who's going to stress out my whole team, our whole team.
Got it. I love it. I love it. So now I want to talk a little bit more about, one of the big, I guess you say, advantages that you guys have. And what I'm hearing is your ability to respond to clients. Like that, it seems like it should be a given, but it's not. And so you guys have figured out how to have a faster response time to whether it's potential clients or existing clients. So how did you guys figure that out of being able to be a tax firm who can respond, pretty quickly to your clients?
Yeah, so prioritization, essentially. So we switched our business model. It used to be, hey, we'll do tax return onlys. Hey, you can engage us on a retainer model. We switched it to what we call our Centurion plans. So we have Centurion plan clients that pay us a fixed monthly fee. It covers everything that they're going to need, access to advisors, their tax returns, quarterly sessions, year end, all of that. And through that, you develop a much closer relationship with the client. And hey, instead of every single client that has a question, every single client that emails us, these are the ones that we prioritize. You're a Centurion plan client. We know when we get an email from you, that's someone that needs a response within 2 days. What we've also done is we've hired account managers who I ask all of our clients to CC on every email, and I've taught them how to do request tracking, essentially making tickets. Hey, this client emailed Mike 2 days ago. They asked about this. Have they got an answer? Follow up on that. So we have a request tracker that we follow as well to make sure that they get responses accordingly. And with our SLAs, the higher the monthly tier, we have gold, silver, bronze light, the quicker the response times as well. So really just building those rules, understanding, which clients get the quicker response and how to do that and how to track it has been huge. But I'm sure Miguel has more to comment on that.
No, I think that's exactly right. I think Ashton highlights three main things for getting communication right. And the first one is having less clients, or being thoughtful about, hey, this is a client that takes 80% of our time, but pays 20% of the revenue, kind of looking at like the reverse Pareto principle. So one is reducing the amount of people that you're responsible to. And then also managing expectations. So for clients that have continued on the legacy model, we let them know that they have a 5 to 7 SLA. So very close to what is normal in the tax industry, which is, hey, I haven't heard back from my guy in 2 weeks or gal. But if you want proactive communication, then you need to fall within the managed plan. I think the second thing is recognizing and distributing responsibility to people's highest amount of highest ability level. What that means is our tax pro, Mike, who is really up and up on the tax code, he can't be in email all day just responding to every request for last year's tax return. He's got to be head down on the tax side. So distributing the responsibility of, as Ashton's saying, is tracking the request a client made, that falls on an account manager who does live in email, who does live on phone, who does text clients. And then the third thing I think is that we manage to results. So we don't just say, hey, are we doing good on clients? Like, are clients happy? We send out NPS scores. So we send those out. We try to work NPS scores into parts of our workflow, meaning that in order for a client to move on, they've got to, let us know on a scale of 1 to 10 if they'd recommend us to a friend, if there's anything we need to get back to. So we have close to real time how successful we are in getting back to clients. And that, I think, creates an accountability across the board that you don't want to be the tax person that gets mentioned in a comment that, hey, I still haven't heard back. So we have a level of transparency and feedback that I think, we don't have to use it. It's not like we're cracking whips, but I think that transparency encourages the account managers and tax people to make sure that they're not leaving things out.
Yeah, and we monitor NPS score history as well. So if I see someone gave us a 10, 3 months later they gave us an 8, we're proactively reaching out. Hey, where did we drop the ball? Where did the service get a little less than it should be? And then we're working to build. That's when it comes back up to me. All right, this is the feedback that we got. Let's fix something. Let's make this part of the business a little bit better as well.
Gotcha. Now, that's a little out of the box from what I normally hear. And I think in, hosting a couple podcasts, I probably talked to maybe, but in the past 3 years, over 80 different accounting firms and over 600 different business owners. And I don't hear many of them explain a business model like that. So what kind of led you guys to change and shift the business model like that? And I guess when you were thinking about shifting the business model, I guess, were you a little nervous about like whether this is going to work, or had you seen it work anywhere else before?
Yeah, you mean in terms of moving to the MRR model?
Yeah.
Like how we have Centurion plans? Yeah, I mean, I think generally like what we hear a lot about on the accounting side is CAS, right? CAS. And I think that, we owe a deal of gratitude to seeing the CAS model work well. It's almost like we're creating TAS, tax advisory services, and we're trying to replicate what's been successful on the CAS side. So, I think a lot of firms that maybe been on here that we both know, Terrell, have done really well moving to, hey, if you want to be a client, this is how it works, and you don't have to worry about the seasonality of businesses or clients churning if they're not happy. So for us, I mean, we really want to make sure that the clients we commit to, that we're really committing to being proactive with them, and we can't do that. Like we actually have an inability to be successful with someone that's in and out of the firm, just coming in December for planning, getting their tax return filed in September, and then they're like, hey, I got a penalty. Like, what the heck did you guys do wrong? And actually, we have a real example where we have a client who has $7,000 in interest and penalties for making a late payment, and we offered them to bring them into a managed plan where we could have helped them make a payment. And we said, hey, if you're not going to be able to do that, we're not going to be able to work with you until the summer. So by the time we got to them in the summer, it was too late. And they're kind of coming back. They're like, hey, like, what the heck, guys? Like, you need to do better. And we're like, actually, in a very respectful way, we gave you the opportunity to work with us in the way that not only works best for us, but works best for you. And you opted out. And our other clients, so it's funny because this is a situation where it was maybe going to be really negative, and we're turning it into a selling opportunity, because really, I mean, the model works when you have a commitment. When I mean, we're all married here, right? It's like if you're just going on a date, the level of commitment, attention, and care is very different than I am with my spouse, right? So we're almost, it sounds a little cheesy, but like we really are getting into more of a marriage arrangement, or at least like living together arrangement with our clients versus dating.
No, I like that analogy. I mean, and I think it is very, very true. I will say that the people who come to you for one-off support, that they're not going to get the same level of depth and attention and commitment as someone who's on more of a consistent pattern of working with you. So that makes perfect sense to me. Now, I do want to talk a little bit about some of the, the proactive advice, because I think sometimes, business owners do complain, or they voice their complaint about, well, my tax advisor or my tax person isn't doing this, or they see on social media where someone talks about, oh, you should talk to your tax advisor multiple times a year. And sometimes they have this misconception that, oh, well, that's in the price of getting the tax return done. So how do you guys, can you talk a little bit more in how you kind of educate them on like, hey, there is a separate price for that as opposed to, the one time. And I know you kind of touched on it some where you talked about the tiers, but I guess, can you give people some context over like, hey, how pricing could be different from, hey, a one-off service touch point to like ongoing proactive support?
Yeah, I think Miguel, you should take this one.
Yeah, I mean, so I think the real issue that we had is in the transition. So we trained 300 to 400 clients on doing this, kind of one touch or two touch a year. So the reason that we're still, very conscious about, kind of how clients are sensitive to monthly is because we're still transitioning clients, and we still have legacy clients that are like, hey, I just want this tax return once a year. But to your question, I mean, I think the communication happens at the beginning. So, Ashton leads up our sales team. We have to be very, I think, explicit about it on call number one. And I think it is a question that we have to be asking our prospects. Ashton, correct me if I'm wrong, but hey, what did you do with your taxes last year? What strategy do you feel you got? They usually, when they come in, they're like, we got 0. And then we ask them, would you like us to advise you? And the ones that say no, back to choosing your right clients. And it's like, okay, well, if you're just looking for the PDF of the tax return at the end of the year and just to cut a check, we're probably not the best firm for you. So we find that our best clients are the ones that jump up and say, yes, we want consulting. And now you're in a sales conversation where you say, well, hey, about that, like, this is how we charge for the tax return, and this is how we bill for the advisory component. And typically, the benefit that we have in tax, and something I always work with our onboarding team, is, hey, can we communicate the multiple of value that we give clients? So, like, sure, you might pay us $6,000 a year for tax and advisory, but I guarantee you we're talking about saving 20 here, 30 there. So the ROI is there. So we have to talk about ROI when we talk about our fees, because there's very little ROI on filing a tax return, the compliance piece. The ROI on advisory is pretty big. So yeah, I would say that, like, our playbook is we get really good about asking that to clients up front and then communicating what that looks like.
Yeah, and
Nice.
even though you communicate things, people take it their own way, definitely. So just reiterating that message as well. But I would say one thing that we do really well that I know our clients see a lot of value is we're always staying on top of new tax codes. So when bonus depreciation was going away, all of our clients got a newsletter. All of our clients got invited to a clients only webinar. When these new 171 amortization rules kicked into place, first thing we did was put a blog post together, blast out a newsletter, have a clients only webinar. So all of our clients get access to that. But, we want to make sure that we're keeping people, that we're always on top of the tax codes. Because, if you miss out on buying something big that you were going to have to get anyways, and you wait until bonus depreciation's gone, you just lost tens of thousands of dollars. So we're making sure that our clients are always staying on and taking advantage of everything that you can.
Yeah. And if I'm honest, just to build on that, like, advice for businesses and other firms is that actually a lot of the engagement you get is going to be from people that miss out on that webinar or didn't get, the initial emails, because they're going to feel that FOMO. And they're usually the ones, if they're in our managed plan, they're like, hey, I really want to talk about, like, the last 3 things that went out. I don't have time to look at it, but I've got this massive fear of missing out. And I really want to talk to an advisor. So a lot of those marketing campaigns, even though it seems like who wants to read about tax code, they're really more just putting the right topics in front of clients. They can almost, design your own adventure on the tax side.
Mhm. That brings up a really good point, and even, like, sparked an idea in my mind as you guys were talking about it, is because I do think sometimes, clients don't know what to talk to you about. Like,
Yeah.
they don't know what they don't know. They don't know what questions they probably should be asking or things they should be bringing up. So that's probably, I mean, I would say that's a very brilliant idea on you guys' part of putting out those webinars or putting out those newsletters and keeping it top of mind. So if there's anyone that's listening and they're not getting that from their tax advisor, they're not being informed about things beforehand, can you tell people what is the best way for them to reach out to Tax Hack if they're like, hey, I need better quality service when it comes down to tax? So how do they reach out to you guys to find out more about, if they're the right fit for you, and if, they can become a client of Tax Hack?
Yeah, you can come straight to our website and fill out a lead form. Let's get in contact. That'll come straight to one of our sales reps. They'll get in touch with you, have a discovery call. So it's mytaxhack.com. Also, if you want, you can email me directly. My name's Ashton, ASHTON, at mytaxhack.com, and I'll get you to the appropriate team member.
Awesome. I love it. Well, before we wrap up, one final question I love asking every guest that comes on, and we'll do this one for each. So we'll start with you, Ashton. So I mean, thinking about the conversation that we just had, you were talking to someone telling them like, hey, I was a guest on the Stuff Your Accountant Isn't Telling You. You should definitely go listen to my episode. But hey, here's one really big takeaway that you should have when you listen to the episode. What would your one big takeaway be?
Yeah, honestly, it's probably the biggest takeaway that all of our clients tell me is, I used to not have tax planning. I used to not proactively meet with my tax advisor. Don't do that. You should. It can cost you tens of thousands of dollars if you miss out on something. If a new law comes on that you can take advantage of, but you didn't want to talk to your advisor, make sure that you do. Having proactive tax strategy, it's huge. I mean, also, we have clients where we're reviewing their books on a quarterly basis, where we're looking at their business. We're asking them, hey, what's the next big thing that you have? Sometimes people say, hey, I'm about to develop a software. Great. There's a tax credit that you can now start taking advantage of. So, gone should be the days if you're running a business that's profitable or a business that fluctuates in revenue of, hey, here's all my information in January and February, file my return. No, you should be proactively meeting with people throughout the year, meeting with your advisor to make sure that we're taking advantage of everything that we can in the beginning of the year, making sure that we're doing scenario modeling throughout the year so you know exactly what your decisions have on your tax bill. For example, let's say you have contractors, you want to promote one into a full-time. There's tax implications that you should know. We'll let you know exactly how that number changes. So just be proactive. It can save you a lot of money.
Nice, nice. So Miguel, I'll kick that question to you. I mean, you're at a conference right now. So as soon as we end this call, you're gonna run around and tell everybody, hey, you need to listen for my episode when it comes out. And what are you gonna tell them to listen for, man?
I think it's easier to have a playbook when you've defined your niche, and that time to value is super valuable. I mean, that's essentially the world that we're competing in, where we know we can beat most other tax firms. Is that the time between the client saying, "I want tax planning," and the time of them saying like, "Wow, like we just saved 37 grand. Like, where do we sign?" is really short. And the reason we can do that is because we've got our ICP, our ideal client profile, really tight. And I think that's advice that any business can take. There are riches in the niches because it helps you operate more streamlined.
Nice. I love it. Well, Ashton and Miguel, thank you both for coming on. And before we wrap up, one last time, Ashton, can you say the website again for those that are listening so they know exactly where they need to go?
Yep, mytaxhack.com. mytaxhack.com. You can also email me, Ashton, at mytaxhack.com.
Awesome. Well, hey, thank you guys for coming on.